Hey traders, what's going on? Jamie Saettele here. It is November 3rd, 2021, and this is the Forex Power Hour with me, Jamie Saettele of Scandinavian Capital Markets and SB Trade Desk. Obviously, big day here, FOMC later today, and let's get to it. So, had a little bit of trickery here on the part of the dollar over the last week or so. Remember, we had after a long period of kind of being bullish the dollar, we started to think in the other direction as we got into October, right? Because we were getting up into big resistance, notably on this US dollar index 12,130 to 12,160. Okay. Now, what was the 28th, whatever that was? That would have been last Thursday, so like a week ago, just about, we started to break down. And that was a pretty nasty trap. You can see here, at that point right here, I was thinking that we had broken a wedge or confirmed a big, huge consolidated overlapping rally from the February low. So that ended up being a false or failed move to the downside. And sure enough, we ripped higher the next day, which was a Friday. Since then, we've been just kind of chopping around as the market waits for FOMC, but still on the stronger side for the dollar. So this is something I wrote last night. I'll just read it to you. Clarity is lacking ahead of FOMC as it pertains to general dollar direction. The break, quote unquote, lower in dollar last week proved false. But one can make the case that action since September is 5 waves down. Confidence is extremely low. Hopefully this clears up post FOMC. So I really don't have anything else to add to that. Again, confidence is low. And what I was talking about with the possible 5 waves down is this: 1, 2, 3, 4, 5. And I've also retraced like 618 or so. Yeah, just right there. So it's possible that we just dump following this. But again, this isn't the cleanest, impulse either on the downside. So, really a lot of uncertainty, and that's okay, right? Markets aren't always going to be super, super clear. However, there are some pretty big levels and spots that I would suggest, honing in on as we get into FOMC and just after. So let's get to those anyway. All right. So Euro on a near-term basis, I actually have like literally nothing to show you. But on a longer-term basis, here, I'll just bring in the chart here from last night. So here's that. This is just a week. If you just pull up a weekly, right, 200-week average, pretty big zone, right? That's the March high, which is just below. It's like 115. Okay. And then just above that, of course, we've got some pretty big highs and lows dating back, really back to 2015. So we're in a big, big, big zone here. So the last, call it 6 weeks or so, we've had what can be, best be described as kind of sideways consolidation, if you will. And I'd like to think that given the zone we're at, that this ends up kind of giving way to a move higher out of this, right? So it's called a kind of a base, a bullish base, if you will, for Euro down here. It would seem a good spot for it to happen. But from a near-term basis, I have like absolutely nothing, decent from a setup perspective, right? Maybe it's also possible that we get a spike lower and try to reverse higher, right? Get kind of a final stab to the downside. I don't know. Again, this is all conjecture at this point because, again, we don't have a whole lot of clarity as it pertains to the dollar generally. All right. So, again, don't want to just make something up and analyze for the sake of analyzing. Don't have a lot to look at there. All right. Let's take a look. Let's go to cable actually, which is a little clearer. All right, so this is a shift fork from the high. It's an absolute beaut, right? You've got nailed the low, nailed the high. The center line here is in line with that 618, which is 35 at 73. And that's also, by the way, the low from July. So 35.70s, big spot. That's where I would focus. This is one of those pairs where, I would suggest keeping an eye on 35.73 for support. By the way, 37.10 or so offers a decent spot for resistance. Okay, so cable's a good one to pay attention to in terms of levels into, during, and after FOMC, by the way, because as we know, we tend to get some choppiness, and you got BOE tomorrow. It's certainly possible that maybe we have an A down, B up into 37.10, maybe the final C down into here. So from, again, purely a technical basis here, I'm looking at these two levels, 37.10 and 35.70, okay? Also, by the way, we could be looking at more crypto. We know how big crypto is now, but we've got 100 pairs of crypto live now on CTrader, okay? CTrader is actually what I trade through, so great platform. But yeah, go to ScandinavianMarkets.com to check that out as well. All right. Okay, so cable, good one to look at. Dollar Swiss, another interesting one, by the way, to look at. This is one, I know we looked at this last week. And again, Dollar Swiss, not the popular traded instrument, of course, especially since the events of January 2015. Holy crap, that was a long time ago, almost 6 years ago. But we are, we hit a great level here yesterday, and we have turned up. I'm actually involved in this a little bit here on the long side. Came into support right around 91, and looking for nothing more than really like 92 initially here, which is just short-term resistance. Also, if you throw in a daily chart, it's the 50-day average up there. But yeah, interesting spot to maybe play a bit of a dollar bounce, just a very short-term kind of technical play here, if you will. So that is Dollar Swiss. Let's take a look at Dollar Yen, which has done a whole lot of nothing since trading up into the highs here in mid-October. So again, if I go back to this daily chart, you can see we did hit absolutely gigantic level, right? Channel, along with highs from, what was that, November 2017, so 4 years ago. You've got the high here from October 2018 as well, and we reversed and came off. It looks like we're going to try to stab out, take out the highs here. Frankly, just everything from this high up here on the 20th is just sideways, corrective in nature for sure. So maybe one more, but then I would be wary of maybe reversal risk after that new high, because you would have 5 waves up from the low here on September 22nd at that point. Also, you'd probably have a pretty gnarly divergence going on with momentum, right? Especially, given the strong overbought ratings you had over here. So that's something I would pay attention to as well. There is another yen cross that I'll take a look at here, which actually has a pretty good setup. That is, we'll look at it after we look at Aussie Dollar. Okay, so Aussie Dollar, this is also a chart we threw in last night. We're getting really close to a significant possible inflection point here. Call it 74-ish. Okay. I mean, we're splitting hairs here. I think the low this morning was like 74.15. Again, you have FOMC later, so all of this is based purely on chart stuff. So, let the kind of event get out of the way and see what happens with the initial spikes and lack of liquidity and all that good stuff, and then make your decisions. At least that's how I like to do it. But 74 is a really big level to pay attention to. Several reasons why. All right, you see the center line here, precise resistance back in June, back in July. There was resistance before the breakout back here mid-October. Also, if I bring up our trusty futures and VWAP stuff, you have here VWAP from the low back on the 29th of September is going to come in right at 74 as well. New Zealand dollar, if we get there, is probably one of my favorite setups at the moment. Really hoping that we can get down into 70.50 or so. So again, if I scroll out here, zoom out, and really get a big picture view of this, you can see the neckline that we tagged in August. We tagged it again in September. Then we broke out here, and that would have been October 19th. We have since started to retrace from that breakout. The top side of this trend line here is going to be about 70.50. Call it 70.50, 70.60. That's where we want, that's what we want to see. That's what I want to see in order to position for the long side. Essentially what you're doing at that point is you are playing the final kind of last chance to get a great entry on what could be a massive, massive move to the upside, right? Again, just look at it from this standpoint. Forget this is a daily chart. Just look at it as a big leg up, corrective move down into support, breakout, come back, retest, and boom, right? So could be something special there in Kiwi as we close out this year and go into next year. So this is a very big picture setup that I am paying very close attention to. All right, dollar CAD, bit of a mess here. I apologize for that. Dollar CAD. Okay, so we actually had a pretty big spike higher this morning, up into, given the fact, especially relative to, we have a big event coming up here later, but we traded up to 24.50s, hoping we kind of get a little extra run into 24.70, 24.90. That you can see 24.90s has just been a huge level. You've got, I go to a daily chart, you've got the 200-day average up there. And I think maybe the 50-day average too. 50-day average a little higher. But yeah, 200-day average coming in around 24.80. 38.2 of the drop from up here on the 29th of September is 24.70. And again, 124.90 is just been an important spot essentially since June. So coming into a big spot here for dollar CAD, and really would be looking for the next high between 24.70 and 25.30. And you can see why with the wave count, 1, 2, 3, rally into 4, just about done. And then next leg down probably takes us down sub 122 or something. But this could be a really good setup heading into FOMC because, I like to fade those final spikes, those final exhaustion moves. And if we can get a final spike higher on dollar CAD, maybe you get a spike higher in the dollar and FOMC to complete that fourth wave. Just a thought, but something to keep in mind. Okay, I mentioned that Aussie Yen was an interesting one to follow, and here's why. Okay, so here's a daily chart of Aussie Yen. Okay. So you got this move higher, but count from down here, from that September low, you've got a clear 1, 2, big rally in 3 with the, momentum extreme and all that good stuff. And now it looks like we are trying to complete wave 4. For that, we want to look for support at the top, this little trick top side of the corrective channel. What that is you just connect these two lows, throw a parallel across the top. So we're looking for support there, which intersects pretty close to 38.2 of wave 3. So that's 83.83. Okay. And then your target is all the way up near 88 and change. So if I scroll out, you can see where that comes from. That actually comes from a trend line all the way back 2009, 2016. You can see here how that was beautiful support and then resistance before we just fell off the face of the earth. And it's also, by the way, see that red line, all those highs and lows it crosses. So yeah, Aussie Yen is a very interesting proposition to on the long side. Again, I'd like to see us get down and tag sub 84 and then hold, okay, before I ventured into this. But yeah, just another idea. And I think it fits pretty well given, the idea that Aussie support is probably a little lower, near 74. Or what did I say? Yeah, 74, currently trading 74.20s. So yeah, just a little lower, and then would look for support on Aussie Yen. Okay, so for FX, that's pretty much all I've got. Let's take a look at some commodities. So gold and silver, just like we had that false break lower in gold, we had a false break higher in gold here last week. This is a 4-hour chart. Broke higher here on the 22nd, and since then it's just been a disaster. Actually, as I speak, we're getting pretty close to a level to keep in mind. That's the 618 retrace of the rally here from the September low up to the October high. So 1756 and change. Keep that level in mind. Other than that, I don't have much to tell you about gold. It's not trading very well at the moment. So keep that in mind. Silver, again, 618 here is going to be 22.72. This looks a little more promising to me than gold. You can see the rally. It's more of a impulsive look to it, right? Gold has been just kind of, the rallies have been choppy as hell, and not a whole lot to believe in there. Also, just from a bigger picture standpoint on silver, like we have this great channel where we've reversed higher from, and the horizontal level that we reversed higher from as well. So, on a bigger picture basis, taking out that September 2020 low and reversing higher, has me thinking that we head towards the top of the channel, which eventually is going to be 26 and change. So I'm probably more interested in silver, than gold, as far as paying attention to its, possible support level, which again is going to be like 22.70s. Okay, let's go look at copper and crude oil. Okay, so copper, we're sitting on a big level, and if copper is going to work higher at all, it probably needs to hold basically here. Because if you don't, then what happens is you start to think about double top with this May high and October high. And you can see here the top side of that former trend line held very well. But again, if you come through this, it kind of, to me, it's like a trap door type of thing. You start to fall apart. So I would keep an eye on copper here. If we get a big bounce off of it, then sure, maybe we're off to the races again. But you can't dismiss the fact that we rallied and reversed in the vicinity of those highs. So no assumptions made here that we're just headed higher. I would be watching this very carefully over the next couple of days. And finally, crude oil. We broke down here on crude oil. So remember last week we were looking at this trend line for channel support. We held it, came back, reversed near the center line and former highs, and just today we've broken down. So crude, it's okay to be actually trade the other way now after a hell of a run since August, right? We've traded from 62 up into like 85 and change. I'd be looking lower now. Eventual support actually probably like 74. And here's why. That is the top side. You see this red line here? That is the top side of this trend line all the way back to 2008. 2008, 2013, 2014, and it was resistance actually this year in 2021. So that now becomes your level to watch for support, in my opinion. And it's going to be, call it 73, just below 73. Okay. All right. Okay, so that is all I've got for today's analysis. And again, FOMC coming up here in just about a little less than 3 hours. So get ready, right? Go for a run, get a good lunch, whatever, and be prepared for Powell and all of his antics, right? All right, so that's it. Again, Jamie Saettele here, November 3rd, 2021, and signing off. Good luck. Take care.